Hopes of another rate cut anytime soon have nosedived after the latest unemployment figures fell last month. It added evidence that inflation pressures remain in Australia. The drop in the jobless rate from 4.5% in September to 4.3% last month in October came after the number of employed people rose by 42,000 people. Now, that was well above the expectation of a lot of commentators. So welcome to this week's Property Insider Chat, where Australia's leading housing economist, Dr. Andrew Wilson, and I take you behind the headlines to uncover what's really going on in Australia's housing market. Today, we're going to look at the latest unemployment figures and what these mean for property buyers, property sellers, and the investors in the property markets. There's been a complex mix of data, and we're going to break all that down. And we're also going to discuss the latest home building approval figures and what these mean for our tight housing markets, as well as how our auction markets performed over the weekend. Now, regular viewers would know that each week we share the data, the trends, and the insights the mainstream media often misses, helping you make smarter, more confident investment decisions based on facts, not fear. So whether you're an investor, a home buyer, or simply property curious, this is where you'll get the real story. There's lots to talk about, so let's get into it. Welcome, Andrew.
Yeah, g'day, Michael. And of course, we do flip-flop between the focus on either the employment rate, the labour market, or inflation when it comes to looking at the prospect for interest rates. And we sort of changed around a little bit last month when we did have that increase in the unemployment rate, which you mentioned, up to 4.5%. I think when we discussed that at the time, we did say that even the ABS said that we needed to take those numbers with a grain of salt. And as it's turned out, and as we speculated on, we've seen an improvement in the labour market. The ABS did say with that previous month's result that there were some issues with seasonality, and we did have a surge in new entrants into the jobs market, which did add to that higher unemployment rate. But I think we did discuss the fact that we are now coming into a very high employment period in the economy. Of course, we've got Black Friday, whatever that is. Well, I do know what that is, coming up. And I think it's a Black Friday for those that have got to provide their credit cards to various people who want to take advantage of it. And then, of course, we have the Christmas shopping period as well coming up. So that usually translates, or always translates, into demand, particularly for part-time or casual labour in the retail sector. And that can, of course, impact positively the unemployment rate. So let's have a look at the latest results, Michael. And they were positive across the board. The unemployment rate fell to 4.3% over October, following that 4.5% result over September. Big surge in the number of jobs, up 42,000, and the number of unemployed fell by 17,000. So it was, look, we're seeing some volatility in this data, Michael, from period to period. We've been discussing the volatility of the ABS data, even the seasonally adjusted data, which is supposed to take out, obviously the seasonal volatility, but we're still getting, some extreme results from month to month. But nonetheless, the underlying position in terms of our labour market remains, you'd have to say, remains relatively strong. These are still very low unemployment rates. There's nothing there to encourage the Reserve Bank to cut interest rates to stimulate the economy for fear of a shakeout in the labour market. I think that we need to have at least an unemployment rate with a 5 in front of it, Michael, before we started thinking about using interest rates, monetary policy to deal with that. Of course, we know the US cut its interest rates a few weeks ago after having them on hold all year, and it said that its motivation was concerns over the labour market. So we don't have quite the same perspective at the moment.
Well, in fact, Andrew, the better the labour market performs, the more patient the Reserve Bank's going to be.
Absolutely. And that's why I believe the outlook for, even though we do have some legitimate concerns over the direction of inflation, particularly in regard to what's happening with electricity, which finally, the government's starting to focus on. Well, maybe not finally, but I think that the offset to that is still a strong labour market. And, as I said, I think that that'll keep interest rates in balance. But we do need to see how the economy does pan out over the next, certainly over the first part of 2026. And that might be a moderating factor on concerns over inflation. But I don't think the inflationary issue will activate higher interest rates, as some are predictably speculating, because I'm not sure that's a cure for high electricity prices. Just looking at the data again, participation rate remained at near record levels, 67%. Western Australia and Queensland remained the lowest for the state unemployment rates at 4.2%. And we still have, plenty of, plenty of fuel in the economy with those lower interest rates to keep supporting our labour market.
Anyone who's wants a job, I guess, can get a job, maybe not exactly the sort of job they want, but if people feel secure in their jobs, they make big investment decisions as well as the spending decisions. So that's one of the other factors underpinning our housing markets, Andrew.
Yeah, and as I said, Michael, this is still a strong result at 4.3%. When we look at the historical chart for unemployment rates, it's just above where we were in that very strong period of growth, the mining boom of the noughties. Back in 2008, we had an unemployment rate troughing at 4%. And even during the follow-up mining boom, in 2011-12, unemployment rates were at 4.9%. So this is still a strong result in terms of the labour market performance, and we're only just above where we were a year ago. But it is a business cycle. It's called a business cycle for a reason, Michael, and we would expect after having a sustained period of strong activity over the past 2 years that it would start to ease, but certainly that's a normal response, and no real concerns there in the shorter term anyway. To have to stimulate the economy with lower interest rates. So, and the participation rate is another positive that points to just the underlying strength of our labour market, still tracking at near record levels of participation rate, and well above where we were in previous very strong periods of economic growth, particularly during the mining boom. So, pretty good news there, really, still for our labour markets, and it was something we felt was going to happen following what those more negative results were over September. I guess the bears have headed back into their caves in the short term anyway, Michael, but they'll be back, and we'll be here to respond with reason, I think. But I know. So going forward, and all the states still had 4% unemployment rates. The highest Victoria at 4.7, and all above where they were a year ago. But nothing to get too excited about there. Quite consistent in terms of the performance between the states, Michael.
Well, I know another factor you keep a careful eye on are home building approvals. We know there's not enough dwellings being built, and we know not all approvals actually end up getting built, but it's one of the leading indicators that you put in the mix. Each month we get some building approval figures. What happened recently?
Well, it's been an interesting year for building approvals, Michael. We've certainly seen a revival in unit building approvals, very strong revival, particularly in Melbourne and Sydney. And that's because those state governments have become proactive in terms of expediting increased unit approvals, higher density approvals, because of obvious concerns over undersupply, which is really a significant force in our housing market's performances. We're not alone here. Most advanced economies are suffering from underbuilding and undersupply, and, are having to confront political issues as a result. There's nothing much our government can do to really turn things around, our national government, because land planning is the jurisdiction of state governments. But they're certainly been, doing what they can do to accelerate higher density development. Now, we had some concerns over the previous months. This is the latest data here, is the September data, because we had consecutive falls in activity, which was usually we have a volatile model for building approvals, because we do get higher numbers of units coming through on a month-by-month basis, which tends to give us that volatility in the series. But we did see a bounce back over September, building approvals up by 12.5%, following a 4.7% August fall. Units were up 26%, again, reinforcing what I said in regard to the volatility of the series, reflecting unit developments that come and go in higher numbers than houses. Houses are up by 1.5%, but house building approvals, Michael, have been certainly disappointing, particularly for those that have been predicting a concerted revival, consistent revival in house building approvals. Victoria was the top performer in terms of the states. Total homes were up by 41.3%, and that did reflect a big development that was approved over the month in Melbourne, and that's what we do see. But look, a little bit of improvement with the underlying trend, but nothing really that we could point to for being a sustained a sustained outlook for higher numbers of new homes coming into the market. And of course, even though it's good news to be seeing more units or more approvals, even if there are units, those unit approvals won't become completions for a number of years. And we still have the headwinds of higher house building costs, which also reflect apartment building costs, which will act just to put some constraint on the building approval numbers that we're getting coming through. But overall, it's good to have an increase. Is the underlying energy in our markets, our housing markets, Michael, is certainly constrained by undersupply, and that continues to put upward pressure on prices and rents. So irrespective of what's happening with interest rates and perhaps the economy, if you haven't got enough houses to go around, it's the basic law of supply and demand, and it will put consistent upward pressure on prices. And as I said, we're not alone here, Michael. Most of the Western world is, if I can call it the Western world, is suffering from the same issues as we are in terms of supply.
Strange to supply, of course, is the fact that building new apartments in particular, and the high-rise towers even more so, are not financially viable at the moment, because even though property values, apartment values have gone up around Australia, particularly in Brisbane, that's done well, and Perth and Adelaide, the cost of bringing them out of the ground with cranes, with unions, with all the on costs from the various levels of government are making it hard to work. So I guess we're not going to get a lot more construction until property values increase enough to make it viable.
Yes, Michael. And as I said, what we're seeing with building costs, home building costs, is maybe a sense that the expectations for escalation of building costs or home building costs are now pushing to the next level. I think that we had obviously a strong period of very strong prices growth as a result of the previous government's home builder allowance, which brought forward a lot of demand, created shortages of building materials and labour, pushed prices or costs through the roof. We saw that starting to moderate as that demand eased. And as looked like we were heading back to those sort of 2 and 3% annual rates, we're now starting to see those annual rates pushing up again, which is a concern. Towards 5-6%. And I think that's because that's now become an expectation in the building industry, when they're doing tenders and putting prices in, that they will escalate on an annual basis by now 5 or 6%. And that becomes as I said, the inflationary expectation for the industry. And it's very hard to shift that. And it can really be shifted by a significant downturn, which we have nothing in sight for that. And particularly we know in Melbourne and Sydney, there's an apartment boom going on in terms of approvals, and a lot of construction also in southeast Queensland to keep up with what is an absolute flood in demand for property at the moment. So as I said, I think that's not good news, essentially because it means that there will be higher prices and in a strong market for demand for new construction going forward. But looking at the data, we can see there, the annual data, the houses have just been so really over the past year, up by 1.9% over the year to date compared to the same period last year, Michael, and just 2.4% the year on year. But units have just surged up by 40.2%, Michael, the building approvals for units over the first 9 months of this year compared to the same period last year, and similar 34% year on year. When we look at the trend, Michael, it's higher, and this is the national trend, it's higher, and certainly the numbers over the month are higher than where they were a year ago, but it's flatlined, essentially this year. And a lot of that has been because of an underperformance from houses. When we look at the breakdown on trend for houses versus units, we can even see that the unit trend has just started to ease over the last 6 months as well, Michael. Even though it's growing, it's not growing at the rate it was. And the number of houses approved over the month nationally is almost identical to the same as what was approved over the same month last year. Nothing to get to get our hopes really up for a concerted revival in construction for homes going forward. But when we look at the breakdown for the capital city, Michael, it's interesting as usual, Melbourne leads the charge with the most building approvals for homes. But we're now seeing Sydney catch Melbourne in terms of building approvals for units. Melbourne was leading those comparisons most of the past 12 months, but reflecting that strong growth in unit approvals high density approvals in Sydney. It's now overtaken Melbourne. And I think the really interesting chart, Michael, is when we compare on a capital city basis, houses versus units. And we can see there the massive growth. Look at Sydney, 63.3% increase in the number of building approvals for units this year so far compared to the same period last year. Now clearly outpacing Melbourne, up by 27.4%, as we saw in the previous chart. But I think what's the concern here is when we look at the building approvals for houses, Michael, really going nowhere. Sydney not too bad, up by 5.3%. But the concern is Melbourne and Brisbane, Michael, where they're not building as many houses over the first 9 months of this year compared to the same period last year. You know, they're underbuilding by comparison over the past 12 months. And this was supposed to be, you know, a revival in our in-house building. And you know, the very fact that houses are more of a real-time provider of supply of shelter than units, you know, but we're seeing underbuilding, and particularly in the Brisbane market, which is a booming market at the moment. It's not even, replacing the number of new homes approved for building this year compared to last year. And Melbourne, which is typically the engine room also for new house building, it's also starting to go backwards. So some real concerns there about our revival in housing. And of course, that just keeps the undersupply energy percolating in our housing markets. And when we look at the long-term capital city trend, we're still 26% below our previous cyclical peaks way back in 2015-16. Certainly growing, but still well below where we were at our previous peaks. And when we look at the houses versus units capital city trend, long-term trend, this is the annual numbers on a month-to-month basis. We can see that units are still 41.7% lower than where they were in 2016, Michael. You know, even considering the very strong growth that we've had this year, still a long way behind the previous strong period of growth in building approval. So some way to go still. Positive month is always good news. Not just for balance in our housing markets, Michael, but also for economic growth. But we've still got a long way to go. I'm not sure we'll ever get there to match supply and demand in our housing markets. But, you know, at least a positive September for building approvals.
The building approvals are positive, but the undersupply is obviously going to underpin property values. The property pessimists have all seemed to have gone away and recognised that the supply and demand equation just isn't going to go away. The challenges aren't going to disappear, which means property values are going to keep rising. It's cheaper in many ways today to buy an established apartment and partly also a house compared to what new ones would cost. That's one of the reasons there is still some good value in very many parts of the Australian housing markets.
Yeah, well, I said the underlying energy is moving away from affordability in terms of, you know, what happens in the economy and what happens with interest rates to just, the underlying fact is this is a rare commodity. And of course, it's an essential, shelter is an essential need. And, that's always going to mean that it's going to be harder to purchase a property, more competition, and that means higher prices, essentially, because of the shortage of homes we have. And as I said, I'm not confident that we're ever going to sort of overcome that. And as I think this is a chronic issue in Western economies now, that for what, red tape, green tape, restrictions, that we're just not being, the maturation of metropolises, if I could say that, means you can only go up and you can't really go out anymore, and the high cost of infrastructure to do that, and people wanting to live, closer in, happy to live with a smaller footprint, particularly a smaller energy footprint, Michael, because energy is going to be the big issue in years to come, as it is now already. So it's just very difficult to create the consensus, particularly in established neighbourhoods, for high density living, but that's what the future's got to be. And so there's a lot of tension there going forward still.
I just wanted to remind you that this is not specific investment advice because we don't know your personal circumstances, but we're more than happy to have a chat to help you take advantage of the opportunities the current property markets are offering. So why not have an obligation-free chat with one of the wealth strategists at Metropole to discuss your goals, your options, and what you could do. We're much more than just another buyer's agent. We help you safely create intergenerational wealth through strategic property and wealth advice. Remember, property investment's a process, not an event, so you can't just go out and buy any property and hope to be successful. In fact, now more than ever, getting the right advice is critical. So if you're looking to invest in property or buy a home, go to metropole.com.au and organise a time for an obligation-free chat. You're going to find that at Metropole we're big enough to tip the scales in your favour, but still small enough to care. And since we don't have any properties to sell, our advice is independent and unbiased. I know My Housing Market also keeps a careful track of the auction results. You report them every Saturday. We report them on Property Update and in social media. And it's now getting close to the end of auction season for the year, but it's a time when there's lots more properties being put to auction as people are trying to conclude their property transactions for the year. How did the auction results pan out over the weekend?
We've said this, Michael, that we always know that towards the end of the year, we do get that surge in property. People are focusing on clearing their position by the end of the year, by the Christmas break, and we do get a significant number of properties coming in. It always puts downward pressure on clearance rates, regardless of the nature of the cycle, and we're seeing that occur as we suggested now. Results are still very positive, still a seller's market, but there's far more choices now for buyers out there, and a lot more competition for sellers out there. So it's put some downward pressure on clearance rates. But when we look at the actual number of sales, Michael, that is still very high because the number of properties actually being transacted, even though we have lower clearance rates, significant numbers of properties coming into the market is reflecting just the appetite for purchases in our property markets, in our housing market. So we saw the same thing, higher numbers coming into the market and slightly lower clearance rates. Sydney, big weekend or a big week for auctions, Michael, 1572 auctions in Sydney over the weekend. Yeah, it's a lot. Really is a lot for Sydney. They're the sort of numbers we're used to seeing in Melbourne, which is typically the home of auctions. Slightly lower clearance rate, but still a positive result there for most sellers, 72.6%, and still tracking ahead of where it was a year ago. Melbourne had another surge in listings, in auction listings, 1,500 auctions in Melbourne, up from 1,345. Of course, 2 weeks ago, they had their Melbourne Cup long weekend, so they're sort of coming back from that. Slightly lower clearance rate in Melbourne. This is what we expect with these big numbers of auctions now. The volume of properties in the market, 68.1%. But again, tracking around about 10% higher than where they were a year ago. Brisbane, similar story, but Brisbane actually had an improvement in its clearance rate, that hot Brisbane market. 58.3% is a very positive number for Brisbane, which has its own, I guess, model of auction results, and that is a strong result for Brisbane. 210 auctions. Adelaide, a little bit lower than the week before, but still the strongest market in the country for auction activity. The Adelaide market, the 75.5% clearance rate, and again, well ahead of where it was a year ago, and so is that Brisbane market, well ahead of where it was a year ago. And Canberra, still providing more positive results than it had certainly a year ago, but it's been in revival mode. Canberra, probably not yet in first gear, Michael, the Canberra market, but certainly an improvement on earlier in the year with a 62.3% clearance rate. But when we look at the charts in terms of the monthly results for this year, the past 12 months, we can see the same a pattern in each of the capital city markets, rising strongly from that interest rate drop earlier in the year, peaking through the early part of the spring market, and just easing slightly as numbers surge into the market towards the end. The only consistent model is Brisbane, which is tracking higher marginally than where it was last month. Adelaide also tracking higher, and Canberra similar to Melbourne, and Sydney down a little bit from the previous month. But this has been a very strong spring selling season, Michael, continuing through, very high numbers of sales coming through, reflecting high volumes of property and still positive clearance rates for most sellers. We release on my LinkedIn channel, Doc Andrew Wilson at LinkedIn, the Saturday night snapshot for our capital city auction markets over the week. And as Michael mentioned, he releases the full national report through his various channels as well. And that includes the regional breakdowns for Melbourne and Sydney, which can provide some very interesting insights as to how the local markets are performing, as well as the top 10 results under the hammer over the week. So get a hold of that one. And as we always point out, it's a very good forward indicator as to how our housing markets are tracking. And what we want to do is obviously provide you with the first and the latest, insights into housing market activity.
Well, putting all that together, what you discussed today, I hear that rate cuts are further away than many people hope, with a strong labour market giving the RBA reason to delay any easing. Also, housing supply is going to remain constrained for years, even with the monthly bounce. And the auction markets are still showing significant depth. So I guess any investor who counter-cyclically at the moment, while others are sitting waiting and wondering what's going on, is going to be rewarded in the long term. Look forward to catching up with you again next week, Andrew.
Thank you, Michael.